Hello everyone, it's Friday, June 26, and today we will analyze the charts for the euro and the British pound to identify potential market trends. Yesterday, the bearish trend came to a halt as both the euro and the pound sterling gained ground against the US dollar. Risk optimism was bolstered by the release of important US economic statistics. Data for May revealed that the US PCE price index increased by 0.4% month-on-month and 4.1% year-on-year, marking the largest rise in several years. Overall, these figures were consistent with the consensus estimates. The core PCE price index also recorded a 0.3% monthly increase and a 3.4% annual gain, indicating persistent inflation. This slightly pressured the dollar despite an upward revision of US GDP growth data for the first quarter, increasing from 1.6% to 2.1%. Nonetheless, the Federal Reserve is expected to maintain its hawkish stance as the inflation rate remains above the 2% target. Expectations of strong economic growth are likely to further exacerbate inflationary pressures, prompting the Fed to take more aggressive action and tighten monetary policy and second half of the day, possibly by mid-fall or early winter. Turning to today's macroeconomic calendar, there are no significant news releases from the euro area aside from a speech by Bundesbank President Joachim Nagel. It is worth noting that he maintains a hawkish stance. However, his tone regarding potential easing in light of recent developments in the Middle East and the blockage of the Strait of Hormuz may negatively impact the euro, thereby supporting the US dollar in early trading today. As for US statistics, traders will likely pay attention to trade balance data. However, the main focus will be on the University of Michigan survey results. The Consumer Sentiment Index is expected to remain unchanged at 48.9 for June. Additionally, inflation expectations for June are anticipated to come in at 4.6%, consistent with May's figures. If these results align with forecast, both the euro and the British pound may strengthen against the dollar by the end of the week. From a technical perspective, the 1-hour EUR USD chart indicates that a false breakout at 1387 would trigger a sell signal, potentially dragging the price down to 1356. A break and hold below this level could lead to further losses to 1327, with the potential for the decline to extend to 1288. However, such a sharp drop in the area is unlikely today. If the price reaches 1288, traders are advised to go long and rebound at this level, targeting an intraday correction of 30-35 pips. Long positions at 1356 and 1327 should be considered after a false breakout. Conversely, if bulls manage to gain control of 1.1387, it would be prudent to postpone sell entries until reaching 1411 on a false breakout or 1436 on a rebound, aiming for a move of 20-25 pips. Regarding the British pound, the trading setup is similar. Sterling has reached a new one-week low, but bulls are still showing resistance and are likely to step in at 1.3216. At this level, I recommend considering short positions on the false breakout, anticipating a drop back to 31.75. If the price breaks and holds below this level, the pound may decline to 1.3140, potentially extending weakness to 1.3097. At this mark, it would be wise to go long on a rebound, targeting a move of 20-25 pips. Long positions at 31.40 and 31.75 should only be considered after a false breakout, with the expectations of recovery to 32.16. If selling activity remains muted this area, consider sell entries at 32.44 on a false breakout or at 32.70 on a rebound, also targeting 20-25 pip intraday correction. Good luck to everyone. Have a great weekend.